Thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Well, lower stocks after that better-than-expected jobs report. Yields are higher. Rate cut hopes are lower. We'll trade all of it with the investment committee. Joining me for the hour today, Joe Terranova, Kerry Firestone, Jenny Harrington, and Brian Belsky. All right, so we've been around the way a little bit in the markets, but we are settled lower across the board here. Slightly for the S&P, slightly for the Dow, a little bit more for the Russell, again, on that rate move higher. So, are stocks lower because you put the rate cut hopes on the back burner? Are they lower because rates go up? I mean, Beth Hammack yesterday, the Cleveland Fed pres, was like, I think we're going to wait a bit. We need to be patient on rates. Don't expect much anytime soon. What do you think?
I think that's a question that gets answered on a secular perspective, not really on a cyclical perspective. I think what today's jobs report did is it validates what I said yesterday. Bond market volatility is calm. That's good for risk assets. As far as what's troubling the market today, I think it's a little bit of a rollover in crypto.
Troubling in quotes, obviously, right?
Yeah.
I mean, S&P's flat.
Right, exactly. A little bit of a pullback from where we were yesterday, the enthusiasm we had for it. But you got a little bit of a rollover in crypto, the momentum names, and software. So software had a nice run the last couple of days, and it looks like software is kind of rolling over a little bit. We'll see what happens from there.
So, Kerry, Tony Pescarello over at Goldman Sachs today says, I can't recall a time that was this noisy, this high velocity, this wide open. Others say they can't recall a time that was this expensive. David Einhorn was just on, says, I think this is the most expensive market that we've been in. Says the Fed is going to cut, quote, a whole bunch of times, many, many more than is currently priced into the market. What do you make of both of those gentlemen sort of opining on where we are?
Oh, gosh. Well, David Einhorn is a very smart guy, and he doesn't speak very often.
So is Pasquarello.
So, very smart. So I would say there's pieces of what they both said that are true. Yes, the market is expensive. You can't deny that fact. There are many reasons that it's expensive. One of them is because there aren't as many stocks to buy. I mean, we're talking about shrinking market cap, and that inflates the value of everything. And earnings have been good. Coming out of COVID, we're still having the post-COVID high to some extent. Is there a reason to be particularly concerned? I would say that's a more important factor. What should we be most concerned about? Well, if we're not going to have the kind of slowdown or softish growth period, and employment is strong, and inflation is also hot, I think.
But it isn't, right? But it isn't.
We don't know for sure. I mean, the market is skittish.
Well, we know
that
now.
Fact.
We do know now. I mean, if you want to say, well, we don't know if it's going to start ticking higher again. Yeah. I mean, that's fair, but we don't know, what the weather's going to be a week from now.
Correct, but we have earnings that are growing nicely, but not great. I mean, exceeding expectations.
They're way exceeding expectations. Ed Yardeni says the earnings season is among the best ever.
Yes, I understand that, but relative to it's always supposed to.
They're ahead of expectations.
Only in aggregate.
6 months,
right? But it's only great in aggregate, and this has been my beef all year. Like, and we both know this, as portfolio managers. Yeah. You take it in aggregate. There's a few big things that buoy the whole thing up. You disaggregate it. You look at the other 493. It's not as rosy a picture.
No, I don't know. Earnings have been pretty darn good. We're not. You're talking like you're talking. Well, you pick one stock out of a hat.
I can tons.
You're saying everything outside of the mega caps in terms of earnings. You said look at the other 493.
Only because that's a lot of stocks. I'm not saying the mega caps are the only ones buoying it up, but I'm saying in aggregate, growth is there. Once you start to disaggregate, it's not, it's not as good a picture.
What do you think? You warm enough over there?
I am. It's it's all about layers. Quite frankly, it is.
Everybody loves layers, though.
There's a lot of layers to this conversation already.
I'm a big red onion. Okay.
Haven't earnings? I mean, if Einhorn says, I think this is the most expensive market that we've been in, someone like Ed Yardeni would say that may be true, but justifiably so. Look at where earnings are.
Yeah, I love Ed's comments. Not just because we agree, but we kind of come from the same vintage, and he's talking about some of the same things that. Yeah, we do.
No, you don't.
Go ahead.
Okay, just continue. We're in the process of transitioning in this fourth year of the bull market from a momentum, multiple-driven market to an earnings-driven market. When we wrote our year-ahead piece for 2026, we talked about traditionally and historically over the last 80 years when the S&P 500 moves into more of an earnings-driven market, the returns are roughly half what a momentum and multiple-driven market. Doesn't mean it's not going to be positive. It's still positive. That, to me, is a much more fundamentally driven market. And what's happening with the market and with the participants with these binary moves, buy, sell, there's a big disruption between short-term, intermediate-term, and long-term. And I think at the end of the day, what the market's showing you is that other areas of the market are working. Dividend growth, value, small cap. And the more that they work, the more credibility they have. The more credibility they have, the better performance. So performance begets performance, and we continue to think that those areas will continue to lead in this broadening out.
Barclays today upgrades value, downgrades momentum. Joe, you can go on that, and cautions on small caps. Like small caps got out of the gates like a Ferrari to start this year, and then that's obviously cooled a bit. There is the rates question. There was a bit of is the economy slowing question, but then you get this hot jobs thing today, and who knows? But upgrade value, downgrade momentum. You say what?
So the broadening thesis is supported by earnings, and it is not just domestic. It is in the emerging markets. It is in areas like industrials and financials, and it's in small caps too. Small caps finally are seeing on an annualized basis positive earnings. Momentum can go to different places. Momentum can reside itself in high beta. Momentum can reside itself in low quality. And what momentum is currently doing is it's pivoting more towards quality and more towards value. So there are names that we identify as value. There are names we identify as quality that have established momentum. That is what the momentum factor ultimately does. Now, is the momentum factor outperforming the rest of the market like it has since the first rate cut in September of 24? No, it is not. And I would argue that's a healthy condition for investors.
Okay, so Jenny, here's another one for you.
Yeah.
So you paint a reasonably dour picture of earnings, like you're not all that wowed. So why don't you tell me, why is the Dow at 50K, and why is the equal weight hitting new record highs every day if earnings outside of the Mag 7 are just kind of...
No, that is not what I said. I didn't say earnings outside of the Mag 7 are ho-hum. I said once you look outside of the Mag 7, you can see a much different picture. There's many companies outside of the Mag 7 that are reporting excellent earnings. And frankly, I've been the beneficiary of that for a nice change this year, as with a more value-oriented, disciplined, growth-oriented strategies. So I think of things, I'm really focused on the concept of the K-shaped economy, right? But I also see it as a K-shaped market where there's haves and have-nots. And so what my beef continues to be is to say, oh, earnings are up 15%. Therefore, do we think the market should be up another 15%? No. And what have I been saying for the past 4 months or so? I've been saying take some risk off the table, whatever the form that comes in, and go to other areas. And that may mean if you have a concentrated position in NVIDIA or Amazon or Microsoft because they've grown, take it off and go to maybe small cap or mid cap or value or international or dividends. Go elsewhere with it. Because I've said, Scott, I think the earnings growth potential of companies in that 493 can be very good, but not all of them are. And so this is where I think it's a stock picker's market. Right. So
nobody's saying that all of them are, but you're not getting to new record highs almost every day on the equal weight.
Well, let's look at the Dow.
The majority, I think the majority probably are. Earnings have blown past expectations. There's no other way to say it.
Okay, then why do you have earnings blowing past expectations and you see Microsoft and Amazon like,
well, because there are different challenges around those particular names. Why should there are still idiosyncratic stories? Amazon, the market had a great year last year. Well, let me finish. The market had a great year last year. What did Amazon do? Zero. Did nothing. Is Amazon more representative of the market? No. But the market had a great year, and many of the mega caps had just fine years. Okay, Amazon did not.
This is why I beef against hey, earnings are up a lot, because I think that just sends people straight back to the same playbook, where I think that there needs to be more nuance. I think this is a year for active management, which has not been a year for active management for a long, long time, and I think you need to suss through it. And I know later in the show, there's I think you're going to show us a list, or we'll talk about
but what's the same playbook? playbook, because it's not the same playbook.
No,
the whole point is that the playbook,
the same playbook.
We've added pages to the playbook. We're calling more.
I'm so confused. I don't know what the playbook is at this point.
The industrials
the playbook is do something different, and so Scott's
aren't we buying the industrials and we're buying the transports? Like, what are we doing?
When you say like, hey, everything's great and rosy, the S&P earnings are up, are blowing it out, they're terrific. I think it paints a picture that it's the same as last year. I think it says all companies are doing great. They're not, right? I think you're saying like all consumers are healthy. They're not. There's massive bifurcation. A lot of people are saying that. So there's massive bifurcation, and I think the misleading part of a headline like that, which is why I beef against it, is that it says like, oh, the market's great. I don't think the market's great, right? And that goes to Tony Pasquale's point.
The market was up like 20% last year. You didn't like the market. The market's all right. It's a little frazzled to start the year. Certain parts are better. Now you still don't like the market. Earnings are beating expectations. You don't like the market.
Okay, so you've got Russell 1000 growth down 2%. You've got Russell 1000 value up 6%. You've got NASDAQ 100. Yeah, but I'm just saying, change your playbook, people. Like, if you hear up 15%, don't just go back. And this is because I talk to real people all the time. Having a conversation last night, this woman says, oh, hey, like, I heard the market's terrible. I go, well, the market's up 2%.
Jenny,
right?
materials are up 16%, energy's up 24%.
Tech's down 2%.
Good. Isn't that doing something different? Aren't we doing what you're saying?
Are we? Do you think the viewers are doing what we're saying? Because I think people are sitting in the same playbook that they had last year.
What's moving the market?
What's moving the market are other things, right? Which is why you see growth up.
Like
so all I'm saying,
I think viewers are smarter than maybe you want to give them credit for. I think they've been going to the other areas and diversifying.
Yeah, but all I'm saying is, like,
they have.
Let's not paint broad brush comments. You know, like, oh, earnings are terrific. Earnings are mixed.
But earnings being terrific is the reason that you have optionality as an investor, that you can own industrials, you can own materials, you can own Brazil, you can own the emerging markets, you could go to other places.
Right.
You can own a dividend strategy. Your dividend strategy is crushing it this year. So be happy about that.
Nah. I'm like a Baltimore Orioles fan. I can't be happy when I'm finally winning.
Dividend investors are they're never happy.
Like, Scott, you'll appreciate this. I'm like an Orioles fan.
Never happy.
I'm miserable when I'm losing, and I'm skeptical when I'm winning.
Well, we talked to our executive producer, Kevin, who already went viral once this week and is doing it again because he's an Orioles fan. He may know what you're talking about. I don't know. Let's move on because I can't take it anymore. All right,
you're welcome.
Let's talk about some moves. So we know that the transports and industrials have done well. Most people do anyway. Jenny, sold JetBlue. Why'd you do that?
Well, first of all, we have a huge loss in it. We bought it several years ago, and then things got really out of kilter with the pandemic. The reason we've held it for the last year and a half was we thought it was wildly oversold. So you have a weird year like this year, and you've got a crummy stock like JetBlue that's suddenly up 36%. And you know what you do? You take your loss. It's something I can see us going back to one day because we're pretty high conviction that it will get back to $1, maybe even $2 one day of earnings. But we can take that capital loss, offset realized gains, and sit it out for the next year with an up 36% move. I don't know how much more upside there is from here.
Okay. Why has it struggled when other airlines have done so well?
Yeah. So what happened was, like, pre-pandemic, right? They were a lot of like smaller routes, discount airline. Following the pandemic, that space got flooded, and they ended up kind of in no man's land. They had a ton of competition. They weren't unique anymore. They took on too much debt, and they just didn't get out from under that. And then there was the whole Spirit combination,
Right. I mean, so like there's a good representation of it, at least. But Delta, for example, versus that.
They were in no man's land. They were neither a Spirit that was super discounted. They weren't a Delta that had higher end and first class. They just ended up in no man's land with huge debt.
So we have another move to talk about, and that is Joe Terranova, not in the ETF because obviously he's locked up until the end of the quarter to do anything there. But you bought personally Apple.
Yes.
Well, that's because you sold it in November, late November, and now
Personally,
yes. Personally. November 19th, you sold it, and now you bought it back. Why'd you do that?
if you are running a momentum screen, which is what I'm obviously doing on near-term price action, you have a similar pattern match to what existed in August. I want to be clear. I don't know if you're going to get the upside that you got in August. That was a really strong move that we had from the low 200s up to 250. This time around, it looks to me like we're going to break out of the 288 high and have a 3 handle on Apple. I see that momentum building as it relates to the recent rebalance. I mentioned it on air. When we did the rebalance, Apple scored remarkably high. If you think about owning 150 stocks out of 500, Apple was ranked 154th. The trouble for Apple was the moderation in the revenue growth. And obviously, if that continues to improve, you could expect that Apple might show up once again.
All right, so let's do a little check-in on where we think software is, because it's been really at the epicenter of every conversation that we've had, and for good reason. Cadence, Bank of America today reiterates that as a top pick. They say, well, software multiples broadly have compressed. We believe the pullback in Cadence and Synopsys creates a particularly attractive entry point given resilient fundamentals and AI acting as an enabler rather than a disruptor. 400 is the price target.
Yes, I would agree with that. Cadence is one of the 5 software names that remain in the ETF. And I think the compelling fundamental story surrounding Cadence is the relationship that it has in terms of providing the software to design the semiconductor chips. And they have leadership in that regard. They have, over the last several years, continued to grow the market share. And I think that is one of the compelling reasons, in addition to what is a very strong balance sheet, why the stock at 298, I believe, is undervalued.
So AppLovin reports earnings after the bell. That is today. So what about that name in light of what's happened with some of the other software stocks?
It's remarkable that when you think about what was thought to be such an extreme valuation has compressed so much. You're talking about somewhere in the 50s, looking for 294 and 1.6. 294 EPS, 1.6 billion. You're going to see strength as it relates to advertising in gaming and e-commerce. The challenge is, I think the street knows that. The consensus expectation for this earnings report, Scott, it's really, really high. So they kind of have to exceed that and go even beyond. The free cash flow is something I would pay attention to. Can the free cash flow come in above $3 billion? That would be a catalyst.
Well, there's the year-to-date. So it's down 34% year to date. Can we do a week to date? We're only 3 days in, obviously, but you have had a pretty decent bounce. Yeah. And there it is, 9 1/3%. Now going into the print in a very uncertain environment.
Uncertain environment for sure. I'm going to be very candid. I'm not sure what the reaction here is going to be. I still think they need a really, really strong report to get a significant restoration of the bullish momentum that if you pull back the lens to a 1 year or 2 year time frame exists.
Now, Elsky, I'll come to you.
Yeah.
Some say that's well overdone, but what do you think? Because you have, what do you got? You have Raymond James and you have LPL.
Schwab and
you
LPL.
have Schwab, so you're right in the thick of this.
So we own LPL and Raymond James in our SMID cap portfolio. I think the leaders of those companies came out and did a really great job talking about how it's overdone and with respect to what AI is going to add back to in terms of efficiencies. And I think you're only going to see more and more of that. I just think with the market, it's just kind of going down a checklist of where they can pick on in terms of AI. And now I don't know what's going to be next, but to me, the financial situation is of all of them, way overdone.
But I mean, there are companies that are coming out with these advanced tools that are the altruist from yesterday, that are deemed to be highly disruptive to certain businesses within industries. It's not. Are you acting like it's not justified in any way?
I think part of that can be justified, Scott. But however, if you take 2 steps back and look at who was investing in AI even before we were talking about AI, financial services, fintech companies have been investing in pre-AI way before all these people. So I think at the end of the day, financial companies are actually well teed up to take advantage of what AI is going to bring to their companies versus these spot-by-spot moments like we've seen this week.
I think it's a reflex reaction. I think the algorithms are capturing the moment and seeing automatically AI about to disrupt means eliminate. I think in the case of the financial services industry, it could lend itself to actually assisting. And the thing to think about for the financial services is if we are going to pivot from wealth managers dispensing advice to AI, you have regulatory standards. Where's the liability in that regard for AI? Is AI in some capacity, or the creators of that AI tool, are they accepting the liability surrounding that? You have to think that through. I don't know that that's going to happen.
Look, if you use the word eliminate, I think that's a little harsh. No one's suggesting eliminate, but if you're talking about being disrupted, you're talking about multiple compression. You're selling today in anticipation of a much, more different story down the road. I don't think if we were talking about the elimination of businesses, the stock reactions would be much more harsh than they are.
I'll give you that. My choice of word there maybe is a little bit too strong, but I think it was Stephanie last week who pointed out the proof point is the challenge here. Where is the proof point on all of this? So I think you have to be very careful with that reflex reaction, selling something down 9% without more information.
Jenny, this block is going to be all moves of people on this desk because we have so many that I want to get to. We dropped these down from our A block, Brian, because we just didn't get to it. Monolithic Power, you sold.
Yep.
And Astera Labs is getting crushed today.
Yeah.
And you're a buyer on that dip.
I am.
So why don't you start there with the one you're buying on the dip, Astera, and then we can go into Monolithic.
So you talk the talk and walk the walk. As the market transitions more into earnings driven and broadening out, we want to take our SMID portfolio and actually make it smaller in market cap. So that's why we sold Monolithic Power. And then we went into Astera Labs and then redistributed into 2 or 3 other stocks that we own, including one we're going to talk about later on in the show. We think that this is a really interesting company in the semiconductor space, especially given the fact that they're really centered around data centers and the connectivity there. Very different than a chip company and a lot. So we really like it as a mid-cap company around $25 billion.
Okay, so we got to both of those. Let's jump to Jenny buying Genpact. Tell us what and why.
Okay, so Genpact is interesting. It was spun off from GE in 2005. They've grown their earnings at a 13% annualized rate for the past 15 years. They trade at 9.7 times earnings with an 8.5% free cash flow yield. By the way, this is in our disciplined growth strategy, not our dividend income strategy. But what they are, and I always find like it's hard to explain, but they're a big global company that helps other large companies run their behind-the-scenes operations. So things like banking, insurance, healthcare companies, and all of their outsourced like customer service, supply chain procurement. Okay, the reason it was viable for us is because the stock's down about 30% in the last year, but more importantly, down 20% this year. Why? Because there's the great fear that there's disruption from AI coming. And so it's our job to start to sort through these and say, where is the AI disruption real? And does this company still have a reason to exist? Is it under real true threat from AI? Or is it just a moment in time perception risk threat from AI? When it was down 20%, trading at those valuations, we're like, all right, this is overdone. We can buy this now.
Okay, thank you.
You're welcome.
Brian Belsky, back to you.
Hey.
You bought Pinnacle Financial Partners, regional bank.
We did. We owned First Citizens for about 5 or 6 years. In fact, First Citizens was, I think, the best performing bank stock in the S&P 1500 in 2024. Mm-hmm. So this is a big stock. And so we also used to own this company called Synovus Financial. Pinnacle bought Synovus Financial. And we wanted to see how that integration happened, number one. Number two, following the theme that I talked about in the prior segment, getting smaller in terms of our portfolio with respect to market cap. Pinnacle, we think, in the Southeast is a great player with respect to a smaller cap regional bank.
So you sold First Citizens.
We did.
And you bought Pinnacle with
1 for 1.
Okay, 1 for 1.
Yep.
So let's do more moves. So you're done with Netflix, Joe.
I'm done with Netflix. I'm saving everyone in America that has a Netflix position. Now it can finally go up. I'm long the stock from May of 2024 at $66. You don't want to see what was a really great winning trade turn ultimately into a losing trade. I've had enough. It was liquidated from the ETF in the last rebalance. I said goodbye to today to raise some capital to do some other
And you
things.
don't think, I mean, sort of everybody,
it's going to bounce.
Everybody knows why it's down.
Yeah, it's going to bounce. But what am I supposed to do? I'm long at 66. Pull that back if you can 6 months, the chart, please. Look at the decline. I don't think you could sit there and just watch a stock continue to go lower.
You're just
and lower.
afraid of a round trip or worse.
Well, yeah. I mean, I don't want to sit here and say I bought it at 66 and I sold it at 64 after it went up to 115. That's just a terrible way to manage a position.
Well, plus it can hang out down here for quite a while.
Right.
I don't know. Tomorrow
it's probably going to move higher.
Brian, you own it still, right? I think there's a little bit of a difference in the way you guys see the trading world at times. Yep. Joe's a lot more tactical, I think, than you, who tends to be a little more longer term.
Yeah.
Right? I mean, what do you think about his move? How do you think about it in your own mind?
I love his move because it just makes me feel better about my move.
What's your move? Tell me honestly.
We still like it because I love how emotional he is about selling it. That means we're close to the bottom. I mean, to me.
No, it's not emotional. It's just you, at a certain point you just have to manage a position. You have remorse, though.
I like that. I like that you have remorse and some humility.
Is it emotional, though? The stock's down 35% in 6 months.
No, there's some fundamental operational issues with respect to what's going on with the Warner Brothers situation. That's why we still own Warner Brothers, by the way, because of the silliness that's going on with this bid. But number two, this is the best streamer, so I want to own the best companies. And I look out at a position for 12 to 18 months. Now, if we see further deceleration and we see some really bad operational moves aside from this merger, then we'll revisit it. But I want to own this stock.
Okay.
You know what I want? I want to own this stock, but I don't because I still worry. This is another one where like the valuation's finally coming in to where maybe we could buy it. But then this is one where I'm like, I have no idea how AI disrupts this business.
Fair. Mm-hmm. You could also criticize me, the other aspect of it, for holding on and selling it at 80. Probably should have sold it at 95. Should have gotten out a lot quicker.
That's for sure.
Why not 150? They get 150.
But you were thinking out too, right? Because you're thinking about the mega secular
I'm thinking
thing.
exactly what Scott said. Everyone knows at some point the stock's going to pop once you know the deal's done.
So the other thing you bought more is the OIH. So we talked about what energy's doing. I don't want to get into that. It's just buying more of it. Robinhood, we got to talk about that. Let's show the stock again. Back of earnings, stock's getting crushed. You own that one. Targets go lower today from Deutsche, Barclays, and JPM, too. So 113 is the lowest of those three at JP Morgan.
So this report obviously was not diversified enough. It was too reliant on crypto. We talked about that yesterday. Crypto revenue was down 38%. We know the company is diversifying its model away from that. There also wasn't much improvement in terms of what you want to see for debt to equity, return on equity, balance sheet type of orientations. The growth is moderating for sure, and it's attributable to crypto. And I don't want it to be attributable to crypto. I want to see other areas of this company be able to deliver an offset crypto. Prediction markets, yeah, they're coming, but now football season's over. So is there really going to be that much strength in prediction markets? You kind of have to wait until you get the World Cup in the summer.
Spring training, pitchers and catchers.
Baseball is not football.
Basketball.
So if crypto, Bitcoin's at 66, almost 67. Mm-hmm. If Bitcoin rallies back, let's say if Bitcoin was at 80, would Robinhood look like it does today?
No.
It's that correlated at this point.
Unfortunately, it is. I wish it wasn't.
Join me today, 3 o'clock Eastern, closing bell. Tom Lee will be with me. Nancy Davis. She hasn't been on in a bit, so I look forward to catching up with her. She's always good on vol, volatility, just the markets in general. And then Rich Clarida, too. Interesting jobs report, the revisions, what Beth Hammack had to say yesterday regarding her outlook, and she is a voting member. So we'll see what Mr. Clarida has to say today. Brian Belsky, what do you got?
Palo Alto. We like cybersecurity.
Okay, Jenny?
Millrose Properties, 9.5% yield, land bank spin-off from Lennar, very little AI risk.
All right, Carrie.
Visa stock's been flat for a year, says below a market multiple consumers are going to get their rebate, and that's good for Visa.
Okay, that must be you, Joe.
Yep, and I want to give everyone a stop on this. 264 on Apple. That's your stop price.
And you said it was going to 300.
It is.
All right, see you on the bell. All righty, Brian, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with stocks in a bit of a holding pattern, even as today's surprising jobs report confirms the economy's chugging along just fine, isn't it? We'll ask our experts over this final stretch where this rally now goes from here, including FundStrat's Tom Lee. He'll join me momentarily. We look forward to that. Here's the scorecard with 60 to go in regulation today, but muted, as I said, for the majors. That tells the story, right? We are virtually flat, Dow and the S&P and the NASDAQ. It is the Russell, though, that tick up in rates today, putting some pressure on the small caps. Financials, discretionary, comm services, they are weaker. Meta, Microsoft, and Amazon, Alphabet, too. and they're lower across the board. So we're watching all of that, but NVIDIA and Apple, Steve Kovac was just showing you Apple coming off its best levels on that report of that delay in Siri. How about Micron? How about Micron? That stock just continues to surge, up another 10% today. Robinhood, not so much. It's down almost the same amount, 10%, after its earnings and a continued decline in the price of Bitcoin. There is a correlation there. We'll follow it. It takes us to our talk of the tape. Where best to invest with parts of the market at record highs and others struggling. Let's ask Tom Lee. He is Fund Strat's managing partner and head of research. Welcome back.
Great to see you, Scott.
So what do you make of the price action today? This was a undoubtedly better than expected jobs report. Yields ticked up, maybe expectations of cuts by the Fed ticked down. We're trying to just figure it all out today?
Yes, I think the macro is a little confusing for investors at the moment because we not only have a new Fed chair that's announced and his policy stance isn't clear, but I think investors have been thinking AI was going to eat the jobs market, but we have a pretty decent jobs report. I think it's going to put a lot of weight, and we of course had a weak retail sales, but it's going to put a lot of weight on Friday's CPI report, because if that comes in tame, at least the market can understand that the inflation part of the Fed's equation is cooling. And of course, now if the job market is showing decent strength, it kind of relieves us from a macro perspective, because at least we're not seeing an economic downturn.
How about the fact that the market's been a little frazzled? That's the word I've been using today lately. Bespoke points it out. For the first time in history, the S&P went from overbought to oversold back to overbought in a week or less. Goldman's Tony Pasquarello, Tom, says he can't recall a time that was this noisy, this high velocity, this wide open. What about you?
It's very confusing, Scott. I think that there's two things happening, but I think one is really the bigger effect. I think the smaller effect is that AI, as you know, has gone from being this sort of driver of S&P earnings. Now the market questioning, is AI just wrecking tech so badly that it's bad for the stock market? And also, they're not buying the data centers and hyperscalers anymore. They're actually trying to buy the bullets, not the armies. But I think the bigger effect is that gold has become like this singular monolithic trade that's worked. But gold now is a $40 trillion market. X the Mag 7, the S&P's $40 trillion. Gold is now bigger than the stock market. So I think as gold rises, I think investors are wondering, do they really want to use stocks as a store of value if they can just be buying gold?
Man, I just feel like we're kind of going down the line of the AI shooting gallery. And first you take down some of the mega caps, and then you take down a lot of software, and then you take down some of the private credit names, and then you take down some of the financial data related names. Is that just how it's going to be? We're just trying to guess on who's going to be disrupted the most?
Well, I do think AI's capabilities, Scott, are showing improvements, maybe, as they say, doubling every 7 months, and now it's going from mediocre to quite good and substituting some jobs. I think that, of course, is rattling markets. But at the end of the day, and this is a half-full perspective, it's kind of proof of productivity. So to me, I think what we're seeing is that there is a payoff coming from AI, because for software companies, for the ones that are actually truly disrupted by AI, that actually is a cost savings for a client. So I think it ultimately is productivity.
Tom, when someone like David Einhorn comes on today and says, quote, I think this is the most expensive market that we've been in, can you argue with that? I mean, you can say that it's pricey. Others would say, well, it's justified because look at how earnings are beating expectations. How do you parse that out?
Well, I mean, on a relative basis, his statement is correct because, as the late R. Cashin said, bull markets don't die of old age, they get murdered by the Fed. So every year, the market does get a little more relatively expensive, even if earnings are good. But this year is pretty unique. Earnings growth is accelerating. The ISM is back above 50 after spending basically 3 years below 50. We have a new Fed that ultimately, I think the market is concluding is dovish, and David Einhorn actually believes he's dovish. So that's supportive of multiples going up at a time when the stock market has been shown 6 black swans, from all the way from COVID to the tariff disruptions and still grew earnings. So I think the market's going to have to start to give a higher PE to the equity market, just in the same way that gold's being re-rated at the moment. You know, gold's PE multiple, price to sales, I think is over 50 times right now. So if gold can re-rate, I think equities can re-rate higher.
I mean, Einhorn, to your point, also suggested that the Fed is going to cut, quote unquote, a whole bunch of times, way more than the market is pricing in. Now, I don't necessarily think he thinks that's going to happen for good reasons. But nonetheless, people who say don't fight the Fed will look at that and say, well, if a lot more rate cuts are coming, then it's hard to get all, bared up on this market.
I'm in that camp. I mean, Friday's inflation print just meets consensus. Core CPI year over year is 2.5. That's back to where it was from 2017 to 2019. So it's pre-COVID levels, and yet Fed funds is actually almost twice as high. I do think the Fed can cut rates, but they're probably going to shrink the balance sheet too. But ultimately, that could be lower long-term rates, and that's second leg for housing. So, yeah, I wouldn't get too bearish. But as you know, we think it's a three-phase market. Like 2026 is not an easy year. I think we have to navigate that there's going to be a big speed bump in the middle, and maybe the market's grappling with that too.
Yeah, no, I think that's a good point.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Thursday. It's actually 11:32 a.m. as I'm recording this video. You can see the markets are just dropping like a rock right now. The Dow Jones is down 0.89%. NASDAQ is down 1.72%. S&P 500 down 1.1%. And the Russell 2000 is down 1.93%. We just saw some clips from the halftime report from yesterday and closing bell from yesterday. That was Tom Lee as well. What we're going to do in this video is go over the stocks that they talked about on the shows as we normally do. After the clips, we're going to look and analyze those. Now look at the Dow. Everything is still moving, like I said, because as I said, it's 11:33 a.m. and the market is dropping quite a bit. So this is going to be fun, exciting to do this video live here. Of course, you'll be seeing this a little later, but let's see what's going on here. So here are the things that we're going to cover. We're going to cover the Dow, the Euro stocks, the S&P 500, the Qs, the Russell 2000. Look at the VIX up 12.63% today right now. We're going to look at Apple, Google, Meta, Microsoft, Netflix, NVIDIA, Tesla. Google seems to be the only one of the Mag 7s there that is up. CNBC stocks that were talked about. Look at this, a list of 18 stocks, all of them down today. All of them down. And then we're going to take a look at some of our members' requests. All right, we're going to look at those as well. Let's move this over here to the side so you can see the percentages. All right, and so let's go ahead and get started. Let's get into it. So again, this is what's happening right now as we speak. Let's take a look at the what's causing this, right? Let's find out a little bit more about what's happening here in the markets. Whoops. Stock slide as tech sell-off and fading AI optimism weigh on NASDAQ and small caps. The NASDAQ and small caps led declines amid a broad tech and software sell-off, with Cisco shares under pressure. S&P 500 dropped about 1% as rotation favored cyclicals, utilities, and materials over growth stocks. Dow retreated from record highs as traders shifted away from large cap tech. It's obvious. What else? Weak existing home sales and mixed earnings from Cisco and McDonald's added to the market headwinds. Jobless claims remained resilient but failed to offset the negative sentiment. Oil prices climbed on rising U.S.-Iran tensions, supporting energy stocks. Traders are closely watching upcoming CPI data and key earnings from Airbnb, Applied Materials, and Coinbase. Let's take a look at the heat map and find out what's happening here in the S&P 500. As you can see that a lot of the technology stocks are down. Micron is up it's up 1%. There are a few other stocks like WDC, for example, which is up 5.84. That's Western Digital Corp. Seagate Technology is up 8.66%. SanDisk is up 4.52. Here's another one. Motorola Solutions is up 11.14%. All right, and Zebra Technologies is up 14.78. A lot of the consumer defenses are looking pretty strong. The utility stocks look pretty good. Look at those percentages. The industrial stocks are still looking pretty positive. HWM is up 8.4%, for example. Berkshire is up, okay, but the financials are down. Look at this over here. The banks, the asset management, capital markets, financial data, all that stuff, credit services like Visa, MasterCard, American Express, Capital One. All right, and let's look at the groups. Consumer defensives utilities are the top performers today. All right, this is where people are putting their money. Um, and for the 1 week performance, it's been basic materials, utilities, and energy. Interesting. All right, let's go back to the heat map. I do want to check and see what the themes look like here. And so data centers, all right, and cloud computing, those appear to be up. Serverless computing, FSLY up 68.32%. You've got edge up 7.1. Memory under semiconductors, you see STX is up, WDC. Okay. Anyway, this is just giving us some things, but the commodities don't look particularly great. Look at gold is down, silver, precious metals, rare earth is down, the cryptos are down. Okay. Alrighty. So let's get into those stocks, and we're using the Ichimoku indicator, and that's going to help us really get a sense of what's looking strong or stronger than some of the other. Okay, so like the Dow Jones, for example, is one of the few ticker symbols here that has a blue flag. What that means essentially is that the price is still holding up above the moving averages, the Tengensen and Kijinsen. But look where it's dropping. It's down 0.9%. It is finding some support still at that 496.34 level. How long will that last, though? That's the question. Here's the weekly chart. All right, still holding up above. And it's building a kind of a negative candle going into the end of the week here. We still have Friday, but we'll see what happens for the rest of the day as well. FEZ on the the Eurostox 50 looks very strong here. Guys, for those of you who are unfamiliar with this indicator, let me just give you a quick little summary or review. What we have here is price, the Japanese candlesticks. Now, from this information, we can find the following moving averages are created. Takes the high, the low of the last 9 periods, in this case 9 weeks, and it plots it right there. That's called the Tenkan-sen, the 9 period. Okay, midpoint of the last 9 periods. Then you've got the Kijinsen, which is the highs and lows divided by 2 of the last 26 periods. In this case, 26 weeks. That's called Kijinsen, the red line. We want the green line above the red line, and we do want price to be above both of those moving averages. Then you've got the Ichimoku cloud itself right here. Very visually different than most technical indicators. It's constantly changing. It's based upon the following. So the Senkuspan A and the Senkuspan B line, and then it fills in, and it literally looks like a cloud. So you take the midpoint of those two moving averages and then project that 26 periods into the future, and that's where you'll find it. And then the purple line, the Senkuspan B, is plotted by taking the midpoint of the last 52 periods. So it's much longer. Instead of plotting it under the candle like it did in these instances here, it plots it 26 periods into the future, hence creating the future cloud. And that can help us a little bit with the how thick is this cloud? Is it a thick cloud or is it a very thin one like over here? The thicker the better. And as you can see, that means it's a stronger trend. And then what we've got one more line is the Chiku span, and that's the current price projected 26 periods into the past. Okay. And when that white line is above the candle 26 periods ago, that's very bullish. So all of those elements um, mean that, okay, we've got a very strong trend here. I'm also using the directional movement index. The green line that you see right there, the positive DI9 is above the negative DI9. That's very positive. The white line is the ADX9 that represents momentum. So this is telling us the direction. The green is above the red. That means that we're in an uptrend. Okay. Over here, you see that little decline right there. See the red line when it crossed right there. If we go straight up, do you see how we had a little decline? Okay. So the white line represents momentum. So if that's moving up, that's positive. All right. So now that we have all that information, the weekly chart, and here's the daily, still holding up above the moving averages in the cloud, but we're having a down day today. We're creating a bearish engulfing pattern. Okay, so that's a very negative situation. But again, These two are still the strongest. And what about the SPY, S&P 500? Today it's down 0.95%. You can see it's getting under the moving averages. So it might close by the end of the day under. Again, we're still in the morning. It's 11:41 a.m. Eastern time, and it's stalling at the cloud. So maybe we'll see something change here. Let's look at the 1 minute just for a moment. Yeah, it seems to be stalling. Look at this. Multiple minutes here this morning. Everything started to fall apart right there at the cloud, and you can see the big drop. And now we seem to have stalled around that 683 level, and now it's moving up slightly. And then the Tenkan-sen is crossing above the Kijun-sen on the 1 minute time frame. So that might be the end of this pullback. We'll find out soon enough. The QQQ ETF on the daily chart is doing the same thing on the 1 minute. Here's the daily chart. Not looking good for the QQQs. Why is that? Well, take a look. You've got yourself this big red candle close. It's basically under the cloud currently, and it looks like it might end up under. You got the ADX moving up, but the red line is moving up and the green line is moving down. The red line is above the green line. That's negative. Okay, so the momentum is increasing, but to the downside, you got Chiku span. Remember that white line is under the candle 26 periods ago. That's also bearish. You've got yourself a lower high here than this high that's just been established because it's pulled back a little bit here today. So if we take out this low, we already actually have a lower low too. So if you look at this low, it's lower than this one. So what we are currently experiencing is actually a downward, almost downward type channel situation happening here. Not good for the Qs. Okay, that's the daily chart. And that's a faster, it's if you're trading based on the daily charts, okay, obviously this is not the right time to be adding positions. Okay, you want to be reducing your exposure to stocks in the queues currently because of what's happening here. Here's a weekly chart though, and the weekly chart still is holding up above the 26 period, the 26 week midpoint right there, the red line. But look at this. Momentum is increasing on the weekly chart. Red line is above the green line. It's not looking pretty. The Russell 2000 on the weekly chart holding up above Tenkan. So this looks stronger, the Russell versus the Qs. And let's look at the daily chart. It's under. So even the Russell today, which is down 1.62%, is not looking great. It does overall for the longer picture does look stronger than the Qs though. The VIX represents volatility in the markets. That's spiking today. It's up 15.2%. Again, it's 11:30 in the morning. Everything can change by the end of the day, but I'm just giving you guys a quick assessment of what's happening right now. And let's take a look at the Mag 7s very quickly. We got the Apple also breaking onto the cloud today. It's down 3.53% on the daily chart. Google dropping. It's under the moving averages here. They've actually collided. The Tenkan-sen and the Kijun-sen are at the exact same level of 327.73. Okay. I can see that when I click that little box on the left-hand side, conversion line and baseline. So that's not good. But the good news is we have a bullish pattern. It's called the bullish harami pattern. It's these two candles. It's a large red candle followed by a bullish one. So what happened this morning is the price gapped up and now it's breaking above the cloud again. That's why it's up 1.41. So at least we have one stock that's actually moving up today in the Mag 7s. Is this a buy point? Not in my opinion. Not currently because the ADX is moving up and the red line is above the green line. What about Meta? Meta is actually under the cloud right now. It's declining. That's not looking good either. It's down 2.83%. Okay. You've got let's look at Microsoft. Microsoft is in the decline as well, down 1.26%. Netflix is down 4.9%. Ooh, look at that. So it was stalling, this week, right? You can see that little box right there. And then today it just dropped under the box. So that's very, very negative there. The ADX is starting to spike up. See how it's moving up now? The momentum is increasing to the downside. So again, it's never a good idea to be adding positions when the price is under the cloud. Okay, that's one of the rules of Ichimoku. You never add positions when price is under based on the time frame that you're trading. All right. On the weekly chart, you look at this, it's also very bearish. Still, multiple weeks. Look at all these weeks that it's been declining. And everything started falling apart once we got into the Tenkan-sen It happened here, then it briefly got back above, got above here, and then once we had that negative crossover with the faster moving average crossed under the slower one, it started to really drop. You can see that from that drop, from that point, it dropped 36.13%. That's huge. In such a short period of time, if you think about it, since October 24th, 2025, and from the highs, it's actually dropped about 44%. The highs were back here, and that was, let's see, what week was that? That was July 3rd of 2025. So that's huge. All right. NVIDIA moving sideways, down 0.55%. Tankinson is under Keynesian. It just it's not looking as terrible as the others because it's only down 0.5% compared to some of these others. Okay, but you know, that's the weekly chart. Here's the daily chart. It's re-entering the cloud. Nothing to do here. Tesla under the cloud, still declining. It's down 2.21%. You can see right there. It's just dropping under the Keynesian. I'd stay out of these stocks. Okay. Let's take a look at some of the stocks that they talked about in the show. We're going to run through these quickly. We don't really need to spend too much time. I've already reviewed these. I can tell you the only one that looks okay still is OIH, the Van Eck Vectors Oil Service ETF. Why? Because it looks strong still on the weekly chart because prices technically above the moving averages in the cloud. Although I will say this candle here is not a super pretty candle. That's like a long wick, represents a lot of selling, almost like a shooting star type candle going into tomorrow. We'll see how that works. We're also here, down 2.48% today, but prices holding up above the moving averages in the cloud. So the overall trend is still intact on both time frames, which is why it gets a blue flag. All these other stocks and ETFs that you see here, there's something off technically. Let's start off with GRNY, Fundstrat Granny Shots US Large Cap ETF. This is Tom Lee's ETF. I thought I would throw this one in there too in the mix. Notice how the cloud is turning bearish. That's when the Senkou span A crosses under the Senkou span B. Price is under the cloud. The Chiku span is under the price. Okay, need I say more? The red line is above the green line. A lot of negative things happening on the daily chart. Not the time to be adding positions, okay? ALAB, Stera Labs, also under the cloud. Skip that one, folks. The idea behind Ichimoku is for at a glance, we can quickly assess what's happening in the market or in a specific stock or ETF, and then just choose, okay, to not be buying stocks that are weak. Makes no sense, right? Look at this one dropping like a falling knife. AMP, Ameriprise Financials. It was looking pretty bullish here back on February 9th on Monday. And look at it, since this point right here, it's dropped approximately 15.68%. It all started once it dropped through the moving averages. It continued the next day, and here it is again, okay, on Thursday, still dropping and under the cloud. Whoops, sorry about that. Let's get rid of that. Come on. Okay, let's continue. That was AMP. Here's FCNCA, First Citizens, inside the cloud. Again, if price is inside the cloud, you also want to stay out of that trade. Here's Genpact Limited. Heck no, it's down 4.92% and looking extremely weak right here on the daily chart. If you look at the weekly chart, very similar picture. Here's GLD Gold. Gold, folks, down 3%. Now, I will say this on the weekly chart, it's holding up above that 10 that 9 period. Okay. However, on the daily chart, we're seeing weakness. And I've been talking about how it's not the proper time to be jumping in here quite yet. And I mentioned this just the other day when I was looking at gold. We got this high right here. Notice how price continues to find resistance right there. Okay. The cool thing is we are building what's called an ascending triangle pattern, which is bullish, but we do need to break through that level. Okay. That's necessary for confirmation. And we're not there. The good news also, if you look at the directional movement index, is that the green line is still technically above the red line, but it's not looking real pretty here. It could turn negative. The fact that we had a negative crossover, that's not good. So we'll see if what happens here. But yeah, Robinhood down 8.39%. I said this the other day. I said, don't get your hopes up when you see price moving up for just a few days. It can make you think, oh, this is the bottom right here. When it comes back to a level of resistance, it's more than likely to drop, which is exactly what happened. There are other traders using this same exact indicator. and they're looking for similar patterns. Okay, stay out of that one. IBIT, also same thing, down 2.27%. Very easy and clear. You don't have to be a rocket scientist to see what's happening here. That's my point. JetBlue, JBLU is the ticker symbol. That's also dropping under the Tenkan currently, right? Stay out of that one. MPWR, even though it's above the price, above the cloud itself and above the Kijun price is dropping under the Tenkan, so it's not a buy signal by any means yet. MPR, now this one on the daily chart, it does look more bullish than the rest that I just showed you guys. And why is that? Because if you look at the cloud, the single span A is crossing above the single span B. Okay, so that's the first sign. Secondly, price is above the actual cloud itself. It's above the moving averages. It's above the 200-day, which is that dotted yellow line. The ADX is moving up. The green line is moving up. The red line is moving down, and the green line is above the red line. The Chiku span, the white line, is above price. That's it. That's all you need to know. However, with all of that said, there still is one remaining issue. It's today's candle. It's a reversal candle. Okay? When you see a long wick like that at the top of a move, be careful. This is it could certainly pull back more tomorrow. This is Millrose Properties Inc. And by the way, let's not forget, it's important to also not just look at the daily chart, always confirm by looking at the weekly chart. Let's take a look at that weekly chart. And does that give us the same optimism? I'm going to guess not. And that's only because the daily chart moves first before the weekly. This is a slower chart. It's up to you to determine if you want to use both or not. I do personally, because then I know I have a higher probability trade. But let's look at that weekly. And as you can see, we're not there yet with the weekly. You've got the faster moving average under the slower one. The green line is under red line. Price is under the Kijun. The Chiku span is right, it's flirting with that candle right there. Okay, so no on MRP, which is why it doesn't get a blue flag. PANW is under the cloud, so no on Palo Alto Networks. On the weekly and on the daily chart, still looking very bearish. PNFP is inside the cloud, no on that one. How about Charles Schwab? No on Charles Schwab. It's under the cloud and under the 200. What about SF, Stifel Financial? Heck no, it's down 5.77%. Where it was finding some support here in the cloud, today it is not, and the momentum is increasing. Do you see that? The only positive thing that I've seen here is the fact that the volume at least is declining as price is dropping, but it broke this low over here, and we got a series of lower highs here. Okay. And if you look at the weekly chart, what does it look like? Yeah, we're breaking down here under the Kijun, and that's not a good sign. What about silver, SLV? Yes, for you metal folks out there, okay, down 10.67. I haven't been interested in getting back into these ETFs or, or saying anything positive since we had this big negative reversal pattern, which is called the bearish, okay, bearish engulfing pattern right there. Those two candles. That's when you have a bullish candle followed by a large red candle that engulfs it. Okay, now it's still declining. And from the highs, SLV has dropped 38.2% in basically since the week ending January 30th. Okay, so at one point during the week, it reached that high there of $110. Look at it, it's at $68. That's a huge drop, but it was expected to happen eventually because this thing had taken off so fast and so quick, right? And so it might be short-lived. It might recover, but it's not recovering right now. It's not something I would be touching at this moment. As you can see on the daily chart, it's been stalling here at the moving averages, the Tenkan. It's still technically above the cloud on the daily chart, and maybe, just maybe, if it reaches the cloud itself, it will bounce, but there's no guarantees here. SMH, and that's why we have to keep an eye on it day by day. See what's happening with these, and that's where this chart comes into play. Okay, this is called TC2000. Check out the link in the description. There will be a $25 coupon for the software. And if you guys like the other software that I use, FinViz, this is fantastic. The FinViz Elite, it's got all these great things like themes, futures, crypto. You can check those on the heat map. Maybe you want to do a scanner, a screener. You can do all. You can screen based on fundamentals, technicals, right? Like the 20-day, you can use the 20-day moving average, 50-day moving average, 200-day moving average, right? By the way, you can scan with both platforms, but I'll include a link, an affiliate link for FinViz Elite, and so that you guys can check that out too in the description segment. Okay, so check that out. All right, let's get back to the charts. SMH not looking particularly great here, down 1.52%, but it's still above the moving averages technically, and the positive DI is above the negative DI on the daily, and on the weekly, still looking pretty strong actually for the semiconductors. Okay, so that's positive. That has a higher probability of recovery, obviously. What about the member requests? We have some members that requested some stocks for me to analyze and ETFs, like SLX, for example. Here it is on the weekly chart. This is the VanEck Vectors Steel ETF. Great chart. Down 2.23% today. I don't like this type of candle, the long wick at the top. It looks kind of like a shooting star that's forming. We'll know what that looks like on Friday in the afternoon. What about the daily chart? Bearish engulfing pattern. I wouldn't be adding a position based on this pattern. Okay, I want to see some positivity. I want to see some bullishness first on the candlesticks as well. And I'm not seeing that today. All right, so I would hold off. But it does get a blue flag because it meets all the criteria. We have a bullish cloud. Price is above the moving averages. Chico span is above price. Once it's so clear and easy to like recognize these bullish trends with this indicator. Once you start using it, I don't think you're going to go back to whatever other method you were using in the past. And if maybe you have another indicator that you really like, why not throw that particular indicator under? You can do that in TC2000. Okay. For example, you just hit the plus sign over here, and then you scroll down. You've got MACD, you got stochastics, RSI, whatever you're into, OBV, on balance value. There's a lot of different indicators in there. SSRM on the daily chart, pulling back down 4.83%. Okay, it's still technically sound though. That's the SSR Mining Inc. As I mentioned, gold does still look stronger, in my opinion, than silver right now at this moment. Here's weekly chart, SSRM Mining. Okay, it's still above the Tengen and Kijinsen, so I like this particular this particular stock. All right, let's keep going. Now the rest of these. Chewy, here it is on the weekly chart. It's under the cloud. I think you already know, it's looking pretty bearish here. It got under this low here, 29.99. It's dropped another 18%. The momentum is to the downside, unfortunately, on the weekly. On the daily chart, we're also looking pretty negative here. Let's see where we might find some support next. It looks like it might have already dropped. Yeah, it got under that level. So it got under that low. Where might it find some support? Right here, maybe? Whoops. The low of that candle right there, which is 1975. How far are we from that level? And can you handle another 21.6% drop? That's each person to make that call. FCX is another stock was requested. It's in the copper. It's a copper stock. Freeport McMoran on the weekly chart, still holding up above Tengen Kijinsen and the cloud. On the daily chart, we are down 5.33%. It looks like it just got under the Tengen. We don't know what that's going to look like until later this afternoon, though. It's still 11:59. Okay, a.m. Just about to be noon. What about did I show you guys the weekly chart? Yeah, there's the weekly chart. It's not a great candle. It looks like a gravestone doji, which is a negative candle. Shopify under the cloud on the weekly this week so far. It's down 10.07% today. Here's the daily chart for Shopify. It started showing its true colors right over here when the Tengen crossed under the Kijinsen on that candle. Since then, it's dropped about 35.22%. Okay. SLVM, Salvamo Corporation. Bullish engulfing pattern today. It's up 5.65%. It looks good on the daily. Okay. Nothing negative to say here on it. But here, let me tell you why. You've got the Span A above the Span B. It is moving up. It's not a thick cloud because it's just starting to take off. As you can see, we took out this high, right? So we're above that high. We have a higher low here from this low. That's good. The Tenkan-sen is above the Kijun-sen right there. We're above the 200-day moving average in the daily. The positive DI is moving up. The negative DI is moving down. The ADX is moving up. The Chiku span is above price. All those things look great on the daily. What does the weekly look like, though? Not quite there yet. We're inside the cloud. I'd hold off on SLVM as a company to add to your positions personally. That's just my call. If you want to just trade the daily, that's up to you. But I'm just saying you're taking a big chance there. All right. And this is in the basic materials, it's under paper and paper products. SNPS, Synopsis Inc. on the weekly chart, under the cloud, under the 200. No. On the daily chart, looking down, it's dropping as well. It might find some support right there at those 2 weeks right there, $405 level. Another 2.5%. If it breaks through that level, the next level will be around 376.85. Another potential 10% drop. TTD on the daily chart dropping under the Tenkan-sen here, and it's down 3.53%. On the weekly chart, it's also still dropping. The trade desk. Does this even where's the next level of support for this one? On the weekly chart, let's look at the monthly chart. Maybe down here at $14.84, another potential drop of 77%. What about on the weekly chart? Do we have any support in the weekly? It's down here. Yeah, that's the same level. This is a tough one because it's still dropping. So this one has been hurt. You look at where things start to fall apart based on the weekly chart. And this is why it's important to use that weekly as well. Because everything might still look good on the daily chart, but if the weekly chart is weak, okay, no pun intended, everything can start falling apart. Now look at this. Do you see this right here? From that point where it closed under the Tenkan-sen, it's dropped 79.07%. It went from a high back here of $141 to $26.34. That happened in a very short period of time. Since that high was from December 6th, 2024. It's not that long ago. Anyway, so hopefully you guys can see the advantage of using technical analysis. All right. And if you guys want to see some more stuff and learn more about using this indicator and also get access to my portfolio, you become a Blue Cloud trader or Blue Cloud Legend level member. Let me show you guys. Just come to my channel here, Blue Cloud Trading. Okay. Scroll down. These are all the member videos. I did one just 4 days ago. I went over my entire portfolio. I shared 28 new stock ideas, you know. And to get access, what you do is next to the subscribe button, it's free to subscribe, subscribe and hit that notification bell so you know when a new video pops out. Click the join button if you want to get access to those member only videos. Click join, and then you do need to select Blue Cloud Trader to get access to the member only strategy videos. If you want to get daily trade updates on my stocks, Blue Cloud Legend is the way to go. Click join. If you want to support my channel, become a Blue Cloud supporter. Okay, you can even request a stock or ETF be analyzed in an upcoming video once per month. Guys, thank you for watching. I will catch you all. Got to get back to those charts later.